Good afternoon, everybody from Singapore. Good morning if you're joining us from Europe or elsewhere in the world. I'm Chris Humphrey, Executive Director of the EU-ASEAN Business Council. Welcome to this, our first webinar of 2024. We'll be taking a look at the political and economic outlook for Southeast Asia for the year ahead. I am joined today by a very esteemed panel. Dr. Deborah Elms, who's the Head of Trade Policy at the Hindrich Foundation, Choi Sing Kwok, who is Director and CEO at the IC's Yusof Ishak Institute here in Singapore, and John Jewell, who is the Chief Economist Asia Pacific for Swiss Re. I think we can all agree this year is going to be an interesting year. Globally, we have major elections in the world's largest democracies, India, the United States, and Indonesia as well. There are geopolitical tensions at play, sometimes a softening in relationship between global superpowers, and sometimes the following day, a hardening of the issues between them as well. What role can Europe play this year? Europe itself has elections coming up and a big change in the College of Commissioners in Brussels as well. So lots happening, lots to look at as we go ahead for the year. Now, the format today is that John is going to give us a quick presentation on his view of what's going to happen in the economies in the region and globally as well. And then we'll move into a panel discussion involving all three of my panelists here today, which I will then be moderating. People in the audience, please, if you have any questions, you can use the Q&A box at the bottom of your screens to pose them. I will get through some of your questions as well as some I have here as well for our panel today. So I think without further ado, we'll move to John and his presentation.
Thank you very much, Chris. And thanks, first of all, also for inviting me to speak. Delighted to be here to share some of the views. And this is going to be a very, very quick summary of our global house view. I don't intend to lecture everyone. It's merely to set the scene for a follow-up discussion, and I hope it'll be useful and provide some food for thought. So without further ado, in terms of Swiss Re's view, and this is something that we form together with my colleagues in Europe and also the Americas, is one of, I would say, outperformance in the Asia region. So first of all, the good news is that we are in a relatively dynamic and fast-growing part of the world. And that has been the case for several years now. So if you look at this chart and the dot, the purple dot, which is emerging Asia, excluding China, I'll talk about China a little bit as well. But for EM Asia ex China, I think this is and continues to be a bright spot for the region economically, but also for many businesses, including for Swiss Re as well. It is a region where many businesses are still seeing growth. If there is growth to be found, we've always said that it's more likely to be in emerging Asia. And given that emerging Asia is now also a bigger part of the global economy, it's contributing more in not just growth rates, but also in absolute dollar amounts in terms of the impact to everyone's top line.
John, I don't think your slide hasn't
moved on.
Your slide hasn't moved on from your opening slide.
Oh, I'm sorry. So let me see if I am sharing the right one. I hope this is now showing a bar chart.
Slowly coming up.
I think this should be the right one. Apologies. So I think we are here where what I am seeing on my screen and what I hope everyone else is now seeing is a very simple bar chart showing growth rates for different regions.
Now we've just got your opening title slide. I think you need to press down for another slide. That's it. Perfect now.
Great. Okay, so apologies for that. So the point I was making is that the purple dot, which shows the growth rates for emerging Asia ex-China, has not just historically, but we think in future years as well, continue to outperform just about every other region. And indeed, given the structural slowdown in the Chinese economy, it is likely, we think, that emerging Asia ex-China becomes the fastest growing region, if you like, within emerging markets. So faster than China, faster than emerging EMEA, or indeed LATAM. And so that's what we mean when we say we are in, I think, a relatively lucky part of the world where it is a dynamic and fast growing region. Now, in terms of the near-term prospects, and for us insurance industry participants, interest rates is something that we watch very closely. It matters a huge amount for our business, but also matters, of course, for businesses around the region, both large and small. It affects all of our funding conditions, our financial conditions, whether it's easy or hard to borrow, and also whether it's more expensive or cheaper to pay back debt. And this is a quick snapshot of where we see interest rates going in the region. And I think the immediate conclusion is that it is one of divergence. So, for example, you have some economies where actually we could see interest rates rise this year. So, for example, Japan is perhaps in the midst of actually quite a historic transition as it finally exits negative interest rates. Whereas for much of the rest of the region, we expect them to either hold interest rates, or indeed some central banks will probably cut interest rates this year, which should be supportive of financial conditions and supportive of growth. And this follows really in the steps of some of the other major central banks. You may have already seen the news earlier this week that China has continued to loosen monetary policy, not via interest rates, but by cutting the required reserve ratio, which also serves to ease financial conditions and make it easier for their banks to extend credit to the real economy. And of course, the big one, the US Federal Reserve, a lot of forecasts out there to various extents, really just forecasting quite significant interest rate cuts from the Federal Reserve this year. For what it's worth, for Swiss Re, we expect the Fed to cut as well, but maybe not quite as fast as some of the forecasts out there. We think maybe only starting around the middle of the year, and perhaps 3 or 4 interest rate cuts. But even so, that is still a really quite helpful development for a lot of emerging markets as well. And the reason why that's helpful is because what the Fed does, what the US monetary policy does, has spillovers to the region and to emerging markets in particular. So historically, when you see both the Federal Reserve and other central banks cutting interest rates or easing their monetary policy, that also typically eases financial conditions for the whole world. For example, if you are a borrower of debt that is denominated in US dollars, then of course that easing in US financial conditions also helps to relieve some of the pressure. And typically what you see in the past is that periods where the US Federal Reserve is loosening policy benefits emerging markets in a couple of ways. And one way is through capital flows. So for a lot of emerging markets, especially those that are particularly open to capital inflows and outflows, periods where the Fed is cutting or is expected to cut interest rates typically result in capital flowing back into emerging markets. And actually, that's what the chart on the left here shows, which is that in the final 2 months of last year, we have seen capital flowing back into emerging markets after a few months where capital is flowing out. And this is not just a China story. So, of course, we all know the weakness in China's economy has also meant a lot of funds have left. A lot of capital has flown out of China. A lot of investors have reduced their allocation to China. But even again, in the last 2 months of last year, we're still seeing negative flows out of China, but the magnitude of those negative flows have reduced somewhat. And indeed, this is in line with some of the data and the signaling from the Federal Reserve around the end of last year, suggesting that this year, 2024, they will be cutting rates. And this is also something that we think is likely to also reduce the appreciation pressure on the US dollar, and by extension, ease some of the depreciating pressure on emerging Asian currencies. And again, when you see the US dollar fall slightly, and it has fallen slightly again since the back end of last year, then that is positive for capital inflows into emerging markets as well. And that's what the scatter chart to the right shows. There is a pretty good relationship between US dollar depreciation on one hand and capital inflows into emerging markets on the other. Now, as Chris had mentioned at the start, this is quite an interesting and unique year in some ways, where a great deal of world GDP and also of the markets that we ourselves operate in are seeing elections. Elections neither good or bad by themselves. They don't necessarily create risk, but I think given the environment we're in right now, I think any kind of change tends to raise a little bit of a concern amongst risk managers, just because it is still a period where we've had really one shock after another, whether it is the inflation shock that followed the COVID shock, and at the same time you had the Russia-Ukraine crisis that led to another inflation shock, and so on. And even this year, at the start of the year, you had another potential supply shock going through the Suez Canal and that region, affecting shipping. There are just, it seems, no end to these shocks. And so changes in political regimes are going to add to the uncertainty. For what it's worth, I think financial markets have gotten a bit better at pricing these kinds of shocks and risks. So I think we all remember just, even a few days ago or a week ago, there was quite a lot of talk and noise about what could potentially happen in Taiwan. And yet, stock market, foreign exchange markets, capital markets have generally looked through that. There wasn't a huge reaction. I think the economics probably mattered more in the intervening days and weeks, especially with what Chinese policy makers have done, probably mattered far more in terms of what's happening in the financial markets, rather than the result of the election, which again wasn't really outside of the bounds of expectations for either the financial markets or indeed businesses. So I think that is actually something positive. There hasn't been any overreaction in markets, and I think that's something that I will leave there, which is that overall, I think it is something that, again, what matters for risk and volatility is the things that you don't expect. And I think the crises of the past couple of years has raised risk awareness, the fact that people are aware of things happening and they're not holding on to beliefs that are necessarily, out of date with what's happening in the real world, is somewhat of a positive. So I will stop here. And again, look forward to joining the discussion and taking questions. Thank you. Back to you, Chris.
Thank you, John, for that. I've got a couple of quick questions for you before we move to a broader discussion. You were quite bullish about growth rates in emerging markets, excluding China, and that probably accounts for the large part of Southeast Asia where we are. Now, ASEAN's largest trading partner by some distance is China. Do you see continuing weakness in the Chinese economy as having an adverse impact on growth rates here in Southeast Asia? And when I say weakness, I mean China's still growing, but those growth rates have really come down since their peak.
Yeah, thanks for the question. So I think you're right. First of all, to put it in perspective, which is that weakness is, I would say, relative to where China has been growing in, especially the pre-COVID period, where we could say it was growing at something like 7% in terms of real GDP growth every year. Now we think trend growth may be a bit over 4%, but still, a bit over 4% is probably double what the US grows most of the time, probably triple how much Japan grows. And so that trend is still adding a lot of demand to the rest of the world. So that's first. I think second, what we're seeing in China is still a big drag from the property sector, a still significant weakness in consumption due to various reasons, but the fact that recovering from probably one of the strictest, COVID regimes probably was always going to take more time than maybe some of the more optimistic forecasts of a rebound. I mean, certainly there was a rebound at the start of last year when it finally exited the zero COVID strategy. But because it had been so strict for so long, longer than most other economies, the scarring effect was always going to take a bit longer to work out, whether it's the effect on unemployment, youth unemployment in particular, consumer confidence, business confidence. So we think, it's still going to grow, probably again faster than many of the major economies, including Europe and the US. For the region, I would say that it is probably reaching what you would probably say is the bottom in terms of growth rates. So I think there is recognition from the authorities, especially with, again, the recent policy action, that more needs to be done. I wouldn't say, be then, extremely optimistic about, again, a very, very rapid rebound. I don't think that's just how it will go, it will work. But at least the signs are better in terms of more policy support for the real economy, and again for the rest of the region. Not going to probably see a huge boost or a huge rebound, but at least the second derivative, if you like, things are not going to get that much worse, or indeed could reach a bottom. And in some ways, I think that probably removes the worst case outcome, which is a further descent into sort of deflation, weaker consumption, more debt issues, the kind of vicious spiral, which again is always something that will require a strong official policy response, whether it's cutting the required reserve ratio, or we think, and this is not happening yet, but we think will come, more fiscal stimulus from central government.
Okay, another final question for you. If we're looking a bit further ahead to the later part of this year, I think the prospect of a Trump presidency is looking increasingly likely, and that may mean a return to some trade war type actions with China. Do you see any adverse impact on growth rates in emerging Asia as a result of that?
I mean, when you say return to trade war type policies, I don't think it's actually changed even after President Trump left. So the current administration hasn't really gone any lighter on China trade. So maybe less noise, less unpredictability, but a lot of the policies, the tariffs remain. Some new ones, you could say, have been added. So I think that's something, first of all, to bear in mind. And second, I think in terms of, again, just, looking at a very pragmatic level, what businesses tend to, want and favor, there is still an expectation that, should we have, Trump Republican presidency, then at least judging by past record, they tend to be fairly, inclined towards reducing regulations in other parts or even cutting corporate taxation, which also happened last time. And so what could actually happen is that for non-political reasons, the market actually then looks at the hard facts, and if it sees further reduction in certain regulations or tax cuts, then that could ultimately be a boost to demand or capex in the US, which again for some of its trading partners could be a positive. Now that's only looking at that specific example, which again is purely drawing from what happened back in 2016 when the market initially was shocked and sold off, but then actually turned around very quickly. So all that is to say, it would be difficult to really prejudge what's going to happen with respect to how the political outcome will affect business in particular.
Thanks, John. Choi Sing, I'll bring you into the discussion, following up on that, actually, US-China rivalries, tensions, whatever we care to call it. ASEAN's always been pretty adept at walking a tightrope between superpowers. Do you see them continuing to be able to do that going forward, or is it going to become increasingly difficult for them? And what do you think ASEAN would want from other dialogue partners like Japan or the EU to provide some more balance?
Well, first, thank you very much, Chris, for inviting me to be on this panel. It's great to be able to join Deborah and John on this. First of all, perhaps let me kind of take a step back and sort of say what the US-China rivalry has done to Southeast Asia to some extent. I think that it's good to understand that there is on one hand some positive, sort of consequences, as well as some negative. So the positive consequences of the US-China rivalry have included the reception of being the recipient of more investments from companies that wanted to hedge against being too dependent on China. And on the other hand, China itself, in reaction to its rivalry with the US and the West, has started to search for new markets, as well as new alternative manufacturing locations. And that's where, again, Southeast Asia comes in and becomes a kind of a beneficiary. And on the negative side, I think that's something that is apparent in the discussion so far. We see both sides putting up obstacles, whether it's tariffs or other types of obstacles to the other side. And that has the effect of complicating both the economic and the political relationships for third parties as well. So I think the big negative is really that this rivalry is not really good for business and just makes things much more difficult. So you said that Southeast Asia has been navigating this in quite an adept way. I would say that Southeast Asia just simply wants to have good relations with both sides for the benefits that they can bring. And as I kind of said, even in the midst of the increased rivalry, there are benefits, and it is able to kind of maneuver in order to get better benefits. The fact that Southeast Asian countries want good relations with both sides is something that many people may misunderstand. They think that countries like, for example, Cambodia and Laos, being closer to China, would not want to have good relations with the US. That's actually not true. From all the evidence that we have seen, Cambodia and Laos do want to have good relations, in fact, much better relations with the US. And on the other hand, Philippines, whom one would expect to be much closer to the US, also wants good relations with China because there are economic benefits to be had. I would say that for 2024, the US-China rivalry is actually not going to get worse if either side can help it. I think the reasons are quite apparent. Both have problems that they want to deal with in their own country, so they can do without further sharpening of rivalry with the other competitor. And you have seen that both sides have acted to try to put a floor under any kind of further deterioration in the relationship. So this, of course, then makes it a bit easier for Southeast Asia, because if the two sides are not going at each other or making things, stepping up the difficulties, then I think it will be easier for Southeast Asia to navigate. However, this is just for 2024. For 2024, it doesn't mean that things could not go wrong. Things could still go wrong. I think everyone has to just take it as it comes. But I think the desire of both sides is not to have something go wrong in 2024. Longer term, of course, we would expect things to continue to be difficult to manage. Why would ASEAN be happy with this? I mean, I think the answer is obvious. But another issue is that ASEAN does have its own problems at the moment, problems of unity. But those problems are actually not so new to ASEAN. It has always been dealing with, shall we say, differences of opinion within the organization, between its member states. And in fact, it's designed to deal with such differences in interests and in views. What can the other major powers do? I think the ASEAN as an organization has been trying very hard to upgrade relations with everyone who's interested to upgrade relations, and that has been practically everybody in the last year or so. So it has already upgraded relations with the US. It had already earlier upgraded with China. It's also gone and upgraded with Japan. So there's Australia to do probably in the coming year. So ASEAN will want these partners to draw closer and also to offer some additional stabilization, both economically and also politically for the region. So I'll stop there.
Thanks. Debbie, Josie mentioned at the beginning of when he was answering my question about decoupling, supply chain diversification, and saying that, you know, Southeast Asia could be a winner in this. Do you think Southeast Asia is doing enough to attract supply chain diversification to the region?
Probably no. But I think it's a combination of things. There are some approaches that ASEAN as a region could do. There are some things that ASEAN member states could do. And there are some things that they could do, but will take time to bear, you know, fruit. So what could they do in the short run? Let me just start with that one. Sort of what are some steps that you could do in the short run? Well, there are a number of challenges within ASEAN that bedevil companies that are trying to move goods, services, and investment just within ASEAN, including all sorts of non-tariff issues for trade in goods. So we talk a lot about how tariffs between ASEAN member states are at zero, which is true, but we have a rise in non-tariff measures, which ASEAN has repeatedly promised to address and has, I would say, perhaps spectacularly failed to deliver on. But nonetheless, they're working slowly, very, very slowly towards addressing some of these non-tariff measures. And it could be everything from, you know, customs procedures to testing procedures to inspections at borders to, you know, that runs the gamut, really, of issues that firms have faced when they try to move goods back and forth, many of which are supposed to have been tackled already. And again, these challenges continue to linger. So I think if ASEAN wanted to do a better job of attracting investment in supply chains for goods, it is time to, you know, roll up your sleeves and actually deliver on those promises, because you're not going to get a lot of inbound investment for manufacturing supply chain shifts if firms continue to grapple with practical problems around moving trade and goods. But I don't think you can just talk about trade and goods. I think there's a whole lot of things that ASEAN could do and has promised to do in trade and services, where we have painfully slow liberalization and market integration on trade and services. And we have some investment regimes that are a problem. I mean, this is both at the ASEAN level and then again at the member state level, where we have a number of ASEAN member states who have very difficult rules around inbound investment. So if you think that you want to have more inbound investment, more inbound production in order to participate in supply chains and capture value that is coming out of China or out of the US or just generally shifting for lots of different reasons, then it's time for, I would argue, it's time for ASEAN as a region to actually really knuckle down and deliver on some of these past promises, and for the member states themselves to try to clear out obstacles that they have been repeatedly told by firms are an issue. And it's not just told by foreign firms like those in EU-ABC, they're also told by their own domestic companies that there are challenges with doing business in and around the region. And so I think that is important. And I would say that at a time of disruption, and especially at a time when you have this opportunity to capture more supply chain and more value from supply chains, it's a perfect time for ASEAN to really believe in the integration efforts and to step it up a notch.
Thanks. John, just look at the economic aspects of what Debbie was suggesting there. ASEAN's been doing tremendously well in terms of attracting FDI over the last few years. It's been at record levels. Their trade numbers are going up. I think one of the concerns I often express is if they don't move quick enough on greening their economies, some of the FDI numbers might start to tail off pretty rapidly. But you're still showing excellent GDP growth going forward. On what basis do you think a tail off in FDI might have an adverse impact on those emerging economies in Southeast Asia?
Yeah, so I think the point is that it must be sustainable. So FDI is great. It's the best kind of investment, especially if it's in, you know, a greenfield investment that actually builds something new. It's not something that can be easily taken out. So it's not like the kind of hot money or portfolio flows that I talked about a little earlier. So this is also something that brings skills, technology transfer, and is indeed the way that China really managed its really exceptional growth pre-COVID, well, really pre-COVID, but in the 30 years leading up to that point. I would say when you talk about greening the economy, this is something that is absolutely essential, especially when a lot of the ASEAN economies, according to our research, is already, not just will, but already facing costs from climate change. And for us as a reinsurer, natural catastrophe is something that hits us and affects us hugely, something we devote a lot of resources and attention to. And part of it is actually not necessarily a bad news story. So the fact that a lot of the ASEAN countries are facing increased losses from natural catastrophe is simply due to the fact that they have become much richer. They have accumulated wealth, accumulated assets, and that's good. I mean, urbanization, faster growth, and accumulation of, you know, greater wealth, great value created in cities is all good things. But there is a lag in terms of adapting to climate, adapting to greater frequency and severity of natural catastrophes, whether it be storms, flooding, which requires a lot of investment in, say, the infrastructure, the water infrastructure, drainage. And I think that will be a big challenge for, again, continuing to be able to grow sustainably. So it is, you know, nothing, you know, that is going to hit in, say, 5-10 years times. It's already happening and it's already creating issues. Part of it is, you know, victims of success, I guess, because you're growing richer, faster than many parts of the world. But nevertheless, to maintain not just fast GDP growth, but to maintain, you know, actual you know, wealth accumulation and sustainable wealth accumulation. I think that is an area where we are, you know, really trying to bring awareness and attention to.
Okay, Choi Sing, we all know that ASEAN has a huge disparity in the wealth of its economies, and therefore the ability of some to do more action than others, perhaps in certain areas. We have one of its smallest and weaker economies chairing ASEAN this year in now PDR. Can you perhaps just give us your view about how you think Laos is going to approach its year as chair of ASEAN, and how Laos might try and navigate some of the challenges that are facing the region, particularly on things like sustainability?
Yes, I'll try to answer that, Chris. But could I just respond to a point that Debbie made earlier?
Please do.
Because I think that well, I think Debbie's points are well taken for us who are kind of used to working in developed markets and in developed countries. ASEAN actually is a very, very diverse set of countries. And I mean, I've been in many ASEAN meetings myself, and the way that it progresses because of its diversity is often in a rather meandering way, lah. So I think some people have said that it's 2 steps forward and then you slide back a step and then you make another 2 steps forward with much great effort. So the fact that ASEAN Economic Community, for example, um, wants to eliminate tariffs and have free flow of trading goods. It's indeed a highly visionary target, and you called it a promise. Yeah, I mean it is something set by the leaders to pull, if you like, the entire region along. And it has been, I think, the process has been 2 steps forward, 1 step back, and I think you're not wrong to say that the non-tariff barriers have become, I think, a big part of what needs to be overcome now. I think the good thing about it is that it's recognized, but as we all know, unlike tariffs, non-tariff barriers are much more difficult to deal with and need to be dealt with almost one at a time, or at least one aspect at a time. And so that process is kind of, I would believe, ongoing. I do see some progress, but you're right that it's not going to disappear by tomorrow. Yeah, just my point is just to look at this not as an organization like the EU, where there's certain amount of homogeneity in the state of the economies, but one that's very diverse, and in fact, perhaps even in terms of the bureaucracies being able to cope with these changes are also very diverse. And this plays very much into the point about Laos, right? So Laos is, I guess, expected by many to be a fairly weak chair for this year. And so what does that mean? I think it simply means there will not be any bold new initiatives in this year. However, it doesn't mean that things will go off the rails, I think, under their leadership. Looking at it kind of more continuously, last year, the Indonesian chair has set in motion, I think, a number of processes that with steady effort will make the difference in ASEAN over time. So let me just name a few. I think on the political side is the establishment of the Troika mechanism to manage the Myanmar issue. That helps Laos, certainly, because they don't have to handle it alone. They don't have to lead it alone. There will be a Troika of countries to lead it, and then that will compensate for, if you like, Laos' lower gravitas on its own. Another thing that had gotten going, the DEFA, the Digital Economy Framework Agreement, the negotiation has started, target to finish by 2025. I think this is, again, is moving. I mentioned earlier the upgrading of relationships with the US, Japan, and Australia to come. And also steps towards the implementation of the AOIP. I think all these are not small ideas, they're big ideas, they're moving. And indeed, they will make a big difference, especially the digital integration aspect. It goes, of course, in parallel with what Debbie mentioned about the trading goods and also, of course, the trading services. This is going to be a layer that will help address some of the non-tariff barriers, especially in flow of money and also flow of customs information and so on. So this are things that Laos can provide a steady hand to keep progressing in this year. It doesn't need to set off a lot of new initiatives or visionary new ideas. If it can keep this going steadily, which it has the help of the other area chairs, it will be able to keep the momentum for ASEAN for this year. In a way, we shouldn't be too pessimistic about Laos either, because I do sense very strongly, having had the Laotian foreign minister come to my institute to talk about the year ahead. He is himself an experienced foreign minister, having been also in place the last time that Laos chaired ASEAN back in 2016. And in that year, actually, they did reasonably well. So I think they are able to actually master the processes. And in a way, with help from the others, they will be able to push on in the priority areas. They have actually, of course, chosen fairly uncontroversial areas to be emphasized in this year, 2024. But I think those areas are not unimportant areas. Economic integration, I think digital transformation, sustainability, you mentioned. Laos is particularly, I think, motivated on sustainability because it has a big interest in trying to export renewable energy. And along with that, helping in the energy transformation in the entire region. So they will, I believe, put sufficient emphasis on that because it is good for them. It's also good for the region.
Thanks. I just pick up on a couple of points you said there. Some of us who deal with the region every day actually, I think, would welcome a year where there's no revolutionary new ideas and plans coming out. A bit of a steady as she goes in the region is not a bad thing at the moment, because ASEAN has so many good ideas and they just need to get on and implement some of them. A quick follow-up question to you before I move to Debbie. And Debbie, I'm going to come to you about trade stuff in a second. Myanmar, it's a bit of a thorny problem for ASEAN. There are clearly different views. The Troika, as you mentioned, where Indonesia and Malaysia are going to be holding Laos' hand in that area for this year, I think was clearly done because Malaysia and Indonesia have quite strong views about Myanmar at the moment. Do you see Myanmar as creating an issue for ASEAN unity?
Answer is yes. Clearly, Myanmar means different things to different states. Those that are nearer, it's a very proximate problem for them. It involves border issues. They've been carrying Myanmar problems actually for a long time. And continue to do so right now and even before the coup happened. So their interests would be deeper, and I think they think that they would believe, not wrongly, that a wrong step would actually make their border problems a lot worse. So clearly they see it in a slightly different light from everyone else. Countries a little bit further away, of course, can afford to be a bit more detached and therefore hold maybe a more principled position. So within ASEAN, there's always a need to balance between these different views. I would say that because the current Myanmar problem is not new anymore, it's already reaching the 3-year mark since the coup. There isn't there isn't a panacea solution. There's no magic silver bullet, but it's kind of within the bounds of what they have been working at together for 3 years. So I do see that there is something of a holding position right now. Developments within Myanmar itself could influence how Myanmar responds to ASEAN. So long as Myanmar remains intransigent and wants to just fob off whatever pressure that comes not only from ASEAN but from any other member of the international community, then there's little that can be done. Some advocate hardening the position within ASEAN, but of course there are others who advocate softening the positioning, bringing them back. So between these kind of polar positions, ASEAN will have to find its way forward. does it mean that with this disunity on this one issue, ASEAN cannot continue to work together? I don't think so. As I said from the very beginning, ASEAN works with differences in interests among its members, and therefore it has always been a looser organization than, for example, the EU. It couldn't be a tighter organization because of these diverse differences. It couldn't be an organization that is kind of top-down and supranational. That would not have worked. It just cannot work in this sort of plethora of differences between the different countries. So I expect ASEAN will kind of park the Myanmar issue and move forward on other areas. Myanmar issue will continue to be one that pushes the positions apart, but there are many things where ASEAN can try and work together on because they're all pointed in the same direction, although the, shall we say, the pace of advancement advocated by different countries may be slightly different, but at least they're in the same direction.
Thank you. Debbie, let's move on to trade agreements and trade deals. Actually, one area where ASEAN did work particularly well as a grouping was in finalizing RCEP and pushing it over the line. Jocelyn just mentioned the Digital Economy Framework Agreement they're working on, and of course they're also working on an upgrade of the ASEAN Trades in Goods Agreement. So I've probably got 2 or 3 questions rolled into one for you. Will RCEP make a tremendous difference to the economic development of the region, assuming they all actually use it and implement it? And do you see DEFA and the upgrade of ATIGA making a real difference to trading goods and trading services in Southeast Asia?
Okay, the short answer is it could. They all could. The longer answer is uncertain because it depends in all cases on the level of enthusiasm with which implementation gets embraced. And as we just heard, ASEAN itself is very diverse, and it makes it difficult for implementation to proceed consistently, of course. I have been working with ASEAN for a long time. I don't expect consistent implementation, just to be clear. I expect to have uneven implementation. But where the challenge, in my view, lies is, sometimes you can say, well, I can only move at this speed, which is fine, move at the speed that you think is comfortable for you. But I would say you have to be aware that the rest of the world is moving at perhaps a different speed. And so when I spoke about the difficulties that ASEAN and some of the member states have had in attracting, reshuffling supply chains in the wake of a US-China trade war, then COVID, and then increasing disruption, I would say if ASEAN continues to move at a really slow pace, then you miss opportunities that would otherwise be there. So you can, of course, move at whatever speed makes you happy, but you just have to recognize that you're missing out on opportunities. And especially, I would argue, at times of economic reshuffling, once a factory gets built somewhere, it's built somewhere, and it means it's not built where you are. And that then it's unlikely that you will capture, for example, the factory being built, the jobs that come with that, the future supply chain opportunities, et cetera. I mean, if a factory just, owner says, where am I going to go? And ultimately they say, I'm going to go to Mexico. That is a missed opportunity, in my view, for ASEAN and ASEAN member states. Because again, it's unlikely, in my view, that in the near term, they will also build a facility or build out a facility or add on to something that is already taking place in this region. So that's important because there are particular opportunities that ASEAN has right now. One of them is RCEP, the Regional Comprehensive Economic Partnership that ties together all 10 members of ASEAN with China, Japan, Korea, Australia, and New Zealand. It's in force. It is actually doing quite impressive things north of us, where China, Japan, and Korea have really started to utilize RCEP because it's the first time that those 3 big markets have been linked together. And the opportunities between those 3 are being exploited by businesses increasingly on a regular basis. So I think that's great. But it also means, again, it's sort of opportunity, but could be missed by ASEAN to do the same thing, to say, how can we, yes, ASEAN has agreements with all 3 separately, ASEAN China, ASEAN Korea, et cetera. But how can you think about this in a more unified and integrated way? I think that's important. Now, one challenge I will say for businesses is that because ASEAN already has these existing arrangements, it is hard to say that RCEP today is fantastic for ASEAN because, especially if we think about tariff cuts, if you're already at zero in an ASEAN-China agreement, then using RCEP is not terribly helpful because until we reach the same level of implementation, RCEP might not meet the same level of tariff benefits that you already receive. So for ASEAN-based businesses, the benefit of RCEP is not lower tariffs into a specific market, but the opportunity to think much more regionally with these big players. I think that's important for companies to reflect on. The second benefit I think RCEP delivers for ASEAN is that you can take advantage of these bigger markets, these bigger players who are providing various kinds of assistance and integration support to encourage the use and the utilization of RCEP. And so you can use those dialogue partners as a measure to get to another level with those dialogue partners. I think that's important. So RCEP has potential. But if I say, well, what are some of the challenges in something like a DEFA, Digital Economy Framework Agreement? Lots of potential again, fantastic. But let me just explain what I worry about, having done the work plan for the ASEAN e-commerce agreement. So the ASEAN e-commerce agreement came into force in 2018. As far as I can tell, nothing has happened with it. They came up with a work plan initiative. My team and I, in conjunction with another small consulting company, we did a huge amount of work, figuring out how to do a 5-year work plan that exactly matched ASEAN's level of ambition. We went to all of the member states. We had ASEAN-wide consultations. We had sectoral consultations. Everyone we met with was incredibly enthusiastic about this. They were very excited. All of these officials, all of these agencies, ministries, et cetera. We developed a work plan that was realistic and practical, year by year, that leveraged on existing commitments, existing activities, existing sectoral plans, that took advantage of where each member state was, what their intentions were, what their stated intentions were. We developed a very practical, in my view, 5-year action plan for the e-commerce agreement. As far as I can tell, nothing has happened. Literally nothing has happened that I'm aware of, at least, in this work plan. And for me, that is, again, a sort of missed opportunity. You had relatively easy, straightforward, step-by-step, here's what needs to be done in year 1, year 2, year 3, quarter by quarter, not getting done. And this happens over and over and over again. So I would just say, yes, there are opportunities from some of these new and exciting initiatives. But if there is no appetite by ASEAN at the ASEAN level or by the member states or both to actually pick up many of these excellent ideas, plans, work plans, pilot projects, Pathfinder initiatives, whatever, and deliver them, then it's really just a lot of effort trying to create new, exciting work plans, initiatives, whatever it is, and none of it actually makes a difference to the companies on the ground. And I think that is acceptable for a while, but becoming less acceptable, in my view, as the rest of the world becomes much more integrated and much more prepared to take advantage of opportunities.
Okay. I thought I was downbeat on ASEAN.
Well, I didn't mean to be. To be fair, I didn't mean to be, but I have to say, if you're asking me about a hot button issue for me, clearly, when we ask DEFA, I think this is great. You know, digital right now within ASEAN, both the member states and at the ASEAN level, is too scattered. It's in, you know, so many ministers have some piece of responsibility for something related to digital. Too many ASEAN bodies are dealing with digital agendas. Nobody's quite clear on who's doing what, which means we're duplicating efforts, or we're skipping things, or we're just ignoring stuff. So I think there's a real need for some kind of framework that actually starts to bring all of this together under one rubric and actually tries to say, let's be sensible about the effort that we put in and make sure that we are covering key things and that we are not duplicating and that we are skipping gaps. Awesome. But I am skeptical based on the difficulties we just had with this e-commerce agreement. with the level of enthusiasm that means delivery of something beyond just a commitment, sort of a general commitment or a general level of enthusiasm to make a difference, especially for businesses.
I think, Kwok, you had your hand up. Do you want to jump in?
Yeah, I could just jump in on just responding on a couple of points. So there'll be nothing against you. And yeah, what you say is absolutely right. I just want to kind of add a perspective. So I think as far as the movement of companies, China Plus One and so on, we have actually seen quite a lot of planting of new manufacturing capacity into Southeast Asia. Yes, there are some that will inevitably go elsewhere. But the individual countries, this is at the country national level, I think they have been facilitative. It doesn't mean they have kind of cleared all the rules for all investments. They have cleared the rules for certain investments in certain locations when sort of the company has come knocking at their doors. So this is often, if you like, the way that this movement of investments and therefore then plugging into the new supply chain, which is what you described it as, would take place, and is already taking place. Will there be a more concerted, sort of way in which this is going to be totally open up all over Southeast Asia, and whether under ASEAN's leadership or otherwise? I don't think so. I think that a lot of these countries would want to handle individually. I'm much more worried as far as the investment side is concerned that we'll run into other problems, and these are all national problems. Lack of infrastructure is one, lack of power is another. Lack of sustainable power itself can be a factor for certain investments that companies want to bring in. So this are the kind of obstacles that will, I think, be of a greater real kind of barrier to investments flowing in. They are looking for a home, wanting to execute a China Plus One strategy. So that I'll just leave that as a kind of counterbalancing point. What you say is still, I'm not invalidating what you say. Secondly, let me talk a little bit about RCEP. I think that we got to look at the context of RCEP. Actually, RCEP was never really set out, as far as ASEAN is concerned, to really bring down tariffs between ASEAN and its dialogue partners. Essentially, RCEP is taking its agreements with 6 dialogue partners and putting it all in one. So actually, it's simplifying the rules and standardizing the rules, if you like, from 6 different agreements into one. And so ASEAN's benefit is actually from that, on that front. What you rightly said, what stealthily got into this agreement of RCEP is that it opened up Northeast Asia. And that was, of course, I think Japan, China, and Korea knew that. They couldn't do it on their own, but they could do it as part of RCEP. And they benefited tremendously, as you pointed out. That was not unintentional. I think that was intentional on the part of the countries. So ASEAN, I think, quite understood that RCEP is not going to be groundbreaking in terms of tariffs. It did want it to simplify all the rules that all the 6 separate FTAs would have, and that is a benefit to business. I think the other thing about it is that ASEAN does these things by kind of having an agreement first and then trying to raise the level of ambition after that. So RCEP is a foot in the door. After that, you try and get your knee in, your leg in, and so that's the way it's been done for the the FTAs with the dialogue partners in the past. So they will continue to use this for RCEP. So, and maybe the last point on RCEP is that this was done at a time when the rest of the world was saying no more free trade. And so the signaling effect of RCEP was to say that Southeast Asia is still open for business. We still believe in free trade, and we are still prepared to stick our neck out politically for this. when the rest of the world is saying, no, I want to raise tariffs, I want to block this, I want to block that. I mean, that's one of the, shall we say, the strategic benefits of having concluded RCEP. Thank you.
I think one of the more remarkable things about RCEP actually was ASEAN worked as one during the negotiations. Something which the European Commission don't think they can do, that they clearly can do when they put their minds to it. John, let me just bring you back into the conversation. If I was looking at governments across the region, relatively new government in Thailand, new government in Cambodia, we're going to have elections this year in Indonesia, which I think could be an interesting outcome and might lead to some changes in policy there or some hardening of existing policies like economic nationalism. Are you seeing any changes in economic or industrial policy which may have either a negative or positive effect on the economic outlook?
Yeah, thanks, Chris. So, I mean, first of all, I want to agree, first of all, with the Director and Debbie's comments, which is that the expectations over RCEP really for ASEAN is much more long-term and dynamic. And it really was, in terms of a free trade deal, a much bigger deal in terms of creating trade for, well, the big three, China, South Korea, Japan. But nevertheless, I think the hope is that through reducing the complexity, reducing the spaghetti soup of acronyms and other free trade area, standards and so on, you do get more investment, upskilling, and I think formalization of relatively informal economies in ASEAN as well. So long-term benefits, but not really directly through much higher trade volumes. In terms of, yes, the risks around whether changing political regimes will affect industrial policy, I think what we've seen globally already is really the return of industrial policy around the world. And this, I think, is more of a, we know we're now in a world where free trade, unfortunately, isn't as popular as before. So everyone is looking for really the second best world solutions. And sometimes that means you do have to make interventions that offset interventions elsewhere. So we're not in the first best world where, as a fairly, free trade minded trained economists, we tend to be very pro free trade. But if that first best solution isn't available, then I think intervention is probably something that we're not going to be able to avoid. For what it's worth, that doesn't necessarily mean reduction in opportunities for the private sector. In many ways, it's probably going to mean maybe overall less macro efficiency, maybe more inflation on a macro level, slightly weaker efficiency, weaker growth. But in certain sectors, namely the sectors that are being favored, let's say, by specific policies, then they may actually benefit, may draw additional investment. So in the sort of economic view of looking at it, it becomes somewhat less free market and more like in Keynes's famous example, more like a beauty contest. You really have to look for the sectors that you think the government thinks is going to be the winner. So it's going to be much more complicated. But again, for, I guess, a lot of businesses and a lot of people who work in the region, that may not be anything new.
Thanks. Shing, just a quick look at Indonesia. We actually have a webinar coming up soon on Indonesia for the council. But let me just ask you, a change in government this year in Indonesia, we all know it's going to happen. Do you see any major changes of approach from Indonesia towards ASEAN or indeed on its economic policies going forward? Or are we going to see a continuing of Jokowi's policies?
I expect that on the foreign policy front, as well as the general economic policy for Indonesia to be more or less the same. Whoever wins the elections on the 14th of February. Having said that, I think we are seeing more and more that it's clearly very likely that it will be the Prabowo and Gibran team that will win the elections. And all the more in the case of them winning the election and forming the next administration, they will continue with Jokowi's policies and more or less lock, stock, and barrel. If the other two were to win, I mean, anything can happen, right? So if the other two were to win, there will be tweaks. For example, perhaps they might go slower or even abandon the new capital project. But on the major approaches to ASEAN and also the relationships with major partners, I don't think there will be that much change. So it is steady as it goes. Indonesia has been, to some extent, also looking at itself, moving in a bigger, playing in a bigger field, at G20, for example, which is of course bigger than ASEAN. But I think that ASEAN as a vehicle is still indispensable for the region, and I believe Indonesia also regards it as such. It is able to, I think, play in the bigger global arena in a kind of more substantive way if it has ASEAN with it, and therefore I don't think they will kind of leave ASEAN behind and just move on to this bigger stage, even if that were to happen in the longer term.
Thanks. Right, we're drawing to the end of our time, so I'm going to have one last question for all three of you, which is really get your crystal balls out, please, and have a quick look over the remainder of this year. Do you see any big changes happening, either in the region from either a political or an economic point of view, which may have an adverse effect on the region or a positive effect on the region? And I think for this one, I might start with John first.
Yeah, thank you very much. So the things that worry us right now is a particular concern around still inflation, although it has come down, and for a lot of the region, it has actually, over the post-pandemic period, been a star performer. We've experienced much lower inflation than the US or the Euro area. But I think it is also the case that, when we start seeing a lot of central banks cutting interest rates and labor markets still being relatively tight, which is, again, a good thing, but it could stoke, again, maybe a reacceleration of bank lending and maybe some overheating in certain markets if policy is tightened a bit too much. And some of it could be due to spillovers, say, from easing from the European Central Bank or the Federal Reserve, or indeed China. So I think inflation and its return is something that for us, we are watching particularly closely. And of course, I also mentioned right at the beginning, supply shocks, which are very difficult to predict and would be bad, not just for inflation, but also depressed growth as well.
Okay, Debbie, please.
I think there are two things in particular, one of which is a big category, which is things we can't expect. I mean, I think anyone who's come through the last few years is suddenly realizing there's a lot of things you might not have expected that suddenly happen. It could be conflict, direct conflict, some kind of health crisis, some kind of set of catastrophic climate issues, some sort of unexpected something that suddenly knocks the region or the broader community off what appears to be the path that we would expect between now and the end of the year. So that's the first one, unexpected things, which seem to be rising compared to before. So that's one. And two, I think, are continuing challenges, which I worry about a lot, between US and China. We're not yet going to have a new president till the end of the year, but this will be a very unpleasant, very long year in Washington. And because I can't see any policy that is considered to be too hard on China, I'm worried that that will allow the United States to continue to escalate the rhetoric, and that will create a lot of problems for the rest of the world as the U.S. and China relationship potentially deteriorates. And for anybody who thinks this is not a problem, I highly recommend, I've been recommending to everybody, but I recommend it again. Please read this report from this select committee on the Chinese Communist Party out of the U.S. Congress. It has 150 recommendations, most of which should leave you unable to sleep here in the rest of the region. And so, although I don't think, just to be clear, I don't think 150 recommendations will happen, highly likely that many of them, though, will actually take place in Congress or in the White House or both. And so, that's the kind of risk that I think we ignore at our peril.
Okay. And the final word to you, please, Xing Kuo.
Yeah, so I agree with Debbie that great uncertainty for me is US-China, although I said that I don't expect that both sides will want to have anything happen and any further deterioration in 2024. There are things that are happening that could push either side. So as John had mentioned, Taiwan elections came and went. The results did not become the worst case scenario for China, so China has been holding back. Having said that, they are still, of course, very concerned about what the new president will do once he is inaugurated. And that's something that is right now probably falls into the category of what Debbie thinks is things that could happen, which we do not really expect right now. So some kind of situation that can precipitate the relationship to deteriorate between US and China is definitely, I would say, the big risk for everyone, not just Southeast Asia. There are also, of course, certain things happening within Southeast Asia itself. You talked about the Indonesian elections, but there's also the situation in Thailand, where a new government and also trying to kind of settle ground rumblings within its own population. That would continue to be some risks within the individual countries, Thailand being one, as I mentioned. I think in Malaysia, although the government is very strongly backed by more than 2/3 of the members of parliament, but there's constant maneuvering going on. But these are, I would say, fairly minor uncertainties, can be dealt with and unlikely to kind of disrupt where we see the overall picture to be for Southeast Asia for this year.
Okay, thank you very much, my panel. Thank you for joining us here today. Interesting discussion. We managed to get through a whole discussion and not mention the South China Sea once, which is quite remarkable, because I think that's one of the biggest concerns for many people. It will be an interesting year, a long year in Washington, a long year in Europe, for that matter. There's going to be big changes for the whole of the continent there. But an interesting year here in Southeast Asia. And I think overall, we all seem to be pretty upbeat about certainly the economies in Southeast Asia. So many thanks to all of you. Thanks to our audience for joining us here today. You can find out more about stuff we got coming up by scanning this QR code, following us on LinkedIn. We have a Indonesian election briefing coming up on the 5th of February. So please do join us for that. Otherwise, everybody have a good weekend ahead. Thank you very much.
Thank you. Bye-bye.
Bye-bye.